Hello and welcome to InvestorToday.ca. I'm Dave Glover, your host. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR specialist. Today we're coming to you live from the Chicago Resource Expo. It is Saturday the 28th of April, and I'm sitting here with Tory Aggeler Jr. Tory is the senior precious metals broker, and they are located in Durango, Colorado. The McAlvany Financial Group has a contrarian, in-depth approach to its analysis of monetary, economic, and geopolitical events. This approach helps the company avoid decisions based on emotion or herd mentality, and thus combine maximum risk mitigation with consistent real growth for its client. Investment through all phases of market cycles, integrity, attentiveness, and longevity have characterized the company's client relationship since 1972. I'm going to give you the website. It's www.McAlvanyWeeklyCommentary.com. Tory, welcome to the show.
Pleasure, Dave. Thanks for having me.
You know what? It's great to have someone from your particular field here, especially at the Chicago Resource Expo, because a lot of the times people are coming to these shows and they're really just talking to the mining companies, and they don't really get that opportunity to talk to someone in your position, a financial person who can help them make those really important decisions. So let's talk about it if we can. Can you give us
You bet. Well, it's nice because we see all these miners here, the ones pulling it out of the ground and sending it off to be put into a usable investment capable form, and so that's where we come in, getting the product to the end user, but we do so in a strongly educational fashion, as you alluded to, and quite frankly our role, especially in these calmer markets, is to take the time to educate either on a daily, weekly, monthly, or annual basis, depending on the form of communication. And so being at conferences such as these gives us an opportunity to reach out to more clients and potential clients and have the opportunity to do exactly that in a calm market.
Well, the market being the way it is, I mean, obviously since the economic downturn, a lot of people lost their retirements. A lot of people have lost faith, quite frankly, in whether or not they're going to be able to retire at the time that they think they are. And I'm sure you're getting a lot of questions with regards to that.
We absolutely are, and gold can be put in various vehicles that will help you with the retirement. With some instances, it's a liquid cash or liquid asset type of approach. With others, it's in retirement accounts. For some people, it's offshore storage, where you have the ability to kind of diversify a portfolio for portability or for come what may. And so we can really take gold and silver, platinum and palladium, and put them into different vehicles that help with each of those. But obviously with the emphasis being on the long term, not a short-term trade mentality, but we like the investor that's coming to us with retirement-based long-term questions.
Absolutely. Well, a lot of people have talked about this, and they've alluded to this at some of the panel discussions, the possibility that gold will climb to $5,000 per ounce. Can you maybe talk a little bit about that case?
You bet. I'm going to be speaking about that later here this morning. Quite frankly, the fundamentals are still intact, and what we try to tell people is really stop looking at the price in terms of nominal value measured in dollars. We really have to look at what gold's purchasing power is doing, what the fundamentals are that drive not only the price of gold, but the relative price of gold when compared to other currencies and other commodities. And that's really where you see it, being very, very strong. And so what we're trying to do is say, look, $5,000 an ounce gold, pretty sure bet. We're going to see strong, steady climb. That's going to be the end of what we call phase 3. We've gone through 2 phases of this bull market in the last 11 years, and we know that all bull markets come to an end. We're going to talk a little bit about how to recognize that, but $5,000 an ounce gold, yes. I mean, until fundamentals change, such as the debt issue and some of the things that drive it, monetary policy makers turning over and taking a different direction, interest rates rising, and those sorts of things, a strong dollar policy, well, then we know that strong gold is going to continue.
Absolutely. Well, how do you counter the fact that, you've got the Fed chair, Mr. Bernanke, basically saying that gold isn't really a monetary commodity. Gold is sort of a fantasy, if you will, in terms of its intrinsic value. But we in the investment market know that gold really does carry real value.
Well, it really does. It is the world's reserve currency, and it has been for 5,000 years. You can take an ounce and sell it for any other currency. And we're not looking at it as a currency trading market. Because we're not looking at short-term little swaps. There's there's spreads to overcome in that regard, and so Bernanke did give a little credit where credit was due to Congressman Ron Paul a few weeks ago, saying that people do have the option of diversifying out of an inflating dollar and buying gold and silver. That was an interesting little debate. Unfortunately, they haven't relieved the taxes on it to truly treat it like a real currency.
Absolutely.
But, it is gaining some steam, and I think it's not just here, but it's all over the world. If it were just an American or a Western phenomenon, then Bernanke could have a point. But it's being bullish against the euro, and obviously Asian buying is leading the pack, and so we know that's why it is the world reserve currency. We're seeing the petrodollar get bruised up right now with China and India dealing with Iran and gold, and so they're using it as a currency and giving it its true due.
Right. Well, let's talk about the difference, if you will, or the importance between actual physical gold and paper gold, an ETF or something like that.
You bet. With McAlvany Financial Group, we approach the entire portfolio, so we're managing the paper aspect of it as well. ICA is the precious metals branch. That's a different mandate. We really look at the physical metals as the insurance mandate on a portfolio. We strongly recommend in this environment to have a third of a portfolio diversified out of paper altogether into the physical, something that can't go to zero, something that will truly be your hedge against all forms of paper. That being said, with the McAlvany Wealth Management side, we love the ETFs. Whether it be an SLV or GLD, for example, different mandate. We're looking there at the upward trending market line and the sector that's performing well, that will continue to perform well, lower spreads, and something that's approached more as an investment for performance than it is that pure hedge.
Right. Well, I guess what we need to discuss next, obviously, would be an exit strategy or with regards to gold and silver in the future.
It's a great question. You've got to be dealing with somebody that understands, again, that bull markets do come to an end, that we have our eye on the fundamentals, and there's multiple fundamentals. You can be looking at it compared to other markets, the PE ratios, the Q ratio. You can be looking at dollar policy and interest rates, the bond market, and obviously what are they doing decision-wise in terms of global dollar policy. And so with those things in mind, yes, the exit strategy is critical, because we do want to see this have somewhat of a performance to it as well.
Right.
The dollar since the 2008 low is up 13%, and gold's up over 240%. So clearly it doesn't track exactly with the dollar. So as we see strong dollar policy come and interest rates start to climb in, a real rate of return to turn very positive and get back up over 2% instead of a negative 2%. Those are all things that we're looking at that will be indicators for us to educate and inform our clients that let's at least take a portion of your physical metals and reallocate into paper, because quite frankly, that's where the purchasing power has been increased dramatically. We are looking to step back into the paper market and have that opportunity for legacy wealth growth.
Well, and that sounds, that's just forward thinking. That's planning ahead. Again, not following herd mentality really is a key part of that, isn't it?
Right. Yes, absolutely. If you follow the herd, you're a little late. We'd rather be early. Don McAlvany's been accused of being early for the last 40 years, and we love that.
Well, that's got to be a hard thing to carry, being early when you're right, isn't it?
Yeah, that's right. Better than a day late.
Exactly. Well, as always, I love to give the guests the very last word. Maybe you can talk to, on your last word, maybe discuss, how investors can maybe make a better plan for their future. And obviously you're getting different calls now from probably a broader spectrum of investors who are looking to protect their future.
We absolutely are, and from all over the world. And we're trying to address our Asian clients, and we're trying to address North American and European clients. We have Swiss storage options, a Toronto storage option, working on Singapore storage. And so we're trying to, we really are in a national and international scope, a market leader. And you can call 866-211-8972. Speak with me directly. And you can also go to McAlvany.com, which is McAlvany.com. And learn, obviously, quite a bit more.
Absolutely.
There as well.
And obviously, after watching the video, viewers, you can click on the link and go directly to their site and get some more in-depth information. I've been talking to Tory Aggeler, Jr., who is the Senior Precious Metals Broker for McAlvany. That's www.McAlvanyWeeklyCommentary.com. McAlvany Financial Group. I'm Dave Glover. We'll see you next time.